Alright, let's remember that we're working on 13-23 still. This is part 2, and we are going to prepare the stockholders' equity section. So we did these transactions, and we ended up with these journal entries, right? So there's common stock account affected, preferred stock account affected, and the paid-in capital and excess of par account were affected. So we need to take these numbers and turn them into a balance sheet equity section. So, you know, in real life you'd have the assets, the liabilities, and now we're to the stockholders' equity section of this balance sheet. So I've got stockholders' equity and I've got paid-in capital. That's the first section. You're going to have two parts, the paid-in capital section and the retained earnings section. And then total stockholders' equity. All right, so paid-in capital, we start with preferred stock if they have it. Most people don't, but a lot of places do. You know, if we need to learn what it is. Preferred stock. And we just had one issuance, so that's like about 23,000, right? Okay. Then there was no preferred in capital in excess of par. That's not a thing. All right, and then we have common stock. Now, we actually had two issuances of that. One for $550 and one for $1,500. So that's $2,550. 2050. So common stock is 2050. Then we have paid in capital in excess of par common. So that goes next. So then if you'd had paid in capital in excess of par preferred, it would have gone below preferred, right? And so well, we had two transactions with that. We had 15,950 and we had 1550. So that's 31,450. 31,450. All right. So that is all my paid-in capital. Right? So we add those all up. 23,000 plus 2,050 plus 31,450, and that's equal to 56,500, and we call that total paid in capital, right? Every time you have a title, you have a total paid in capital, total paid in capital. Next comes retained earnings. Okay. So, as you know, on the retained earnings statement, we calculate this, right? We go old retained earnings plus net income minus dividends equals my retained earnings. Well, in this case, this is brand new. Their charter start this year, so they don't have any old retained earnings, so that's 0. They do have net income of 38,000. So we add that. 0 plus 38,000 is 38,000. And they didn't issue any dividends, right? If they had done an equity transaction for dividends, we would have known about that, but they didn't. So retained earnings is just 38,000. All right, so 56,500 plus 38,000 is 94,500. And we call that total stockholders' equity. All right. Now, if this were a real full balance sheet, the next line would be total liabilities plus stockholders' equity, and we'd fill that there, but we don't have the liabilities. But don't ever forget that last part. It's very important. All right, so that's it for Chapter 13.